And joining us to talk more about this market rotation, Ken Kamen is back with us. He's president of Mercadien Asset Management. Welcome back.
Thank you much.
You see this as a safety play by investors, right?
Well, I think that the value sector of the market is so underperformed. Over the last 5 years, the growth sector is almost twice the return cumulatively than the value sector has been, and it's been led by mostly the momentum stocks and the FANG and the tech stocks.
Right.
And a lot of people that are now worried that the market might be getting toppy are saying, okay, do I have to really ride the roller coaster down in those hot stocks when there's a lot of great bargains to be had in what we call value?
Yeah, which goes to the volatility. I mean, we certainly have seen extreme volatility at certain points in this market, much of it linked to headlines on trade. But you were saying that the value stocks, they're more predictable.
Well, the sawtooth of the pattern is a lot tighter in the non-go-go stocks, if you will. And I think that's the really important thing that the viewers have to really focus in on, which is that if you're saving for retirement and it's your nest egg, you really don't want to be riding the yay-boo of every tweet. And getting back to the fundamentals of owning companies with strong balance sheets and strong fundamentals, rather than some company that's got a great growth story and maybe trading at a ridiculous PE, feels a lot safer when the market seems to be bouncing along at the top. But I would like to throw in that what we're in the environment right now is that every time the market gets a new news, like Apple yesterday came out with the new iPhone and everyone was like a yawn. There was no big news there. And now a lot of these IPOs that were so highly anticipated, they've kind of been flat to down.
Right.
So it's that feel that maybe the growthy thing is changing.
So here we are, 27,000 on the Dow again, back to 3,000 for the S&P. We are very close to all-time highs. Are you getting nervous about this market?
Not really. I think that, the old phrase, don't fight the Fed. I mean, it really does look like they're going to cut at least a quota point. I don't think it's going to be more than that, and I don't think more than that is warranted. I think that it's okay for investors here, and I wouldn't be surprised if we get new highs. As a matter of fact, I believe between here and the end of the year, we will. That doesn't mean we won't get another surprise in a dip, but I think things are pretty favorable for equities.
Are there certain areas that you find more value stocks, certain sectors?
Well, I always like the idea of buying what's not been in favor. So to some extent, it's easy to almost say around the whole value chain right now, right, whether it's, some of the healthcare, whether it's some of the financials. I mean, I think it's important to kind of make sure you're broadening out your portfolio. I'd leave you with the idea that if you've been chasing momentum and riding on the fact that every morning you woke up and you felt good, but you didn't know why, now's the time to delve deeper into your portfolio to understand it, to own things that haven't been the go-go stocks.
There you are. Words of wisdom from Ken Kamen of Mercadien Asset Management. Always good to see you. Thanks again, Ken, for joining us.